What's up, traders? Welcome to this week's episode of the Weekly Watch List, where I do a technical analysis and give you my thoughts on the tickers listed up above. We'll of course be checking in on our broad market, our core list of companies, and this week I've got 8 additional trade ideas for us to check out towards the end of the video, so definitely stay tuned for that. Now, a majority of these ideas, I would say 5 of the 8, did come from Discord members, so if you want to chat with myself and other great traders, definitely check out the links down below in the description. And before we get into the trades and the charts here, I would point out that on Thursday we have Thanksgiving, so the market will be closed, and on Friday we will have a half day, and I would just expect extremely light volume as a majority of traders actually take that day off. Maybe I would encourage you to take the day off as well, take some time, spend it with family and friends, just get away from the markets, give yourself a bit of a long weekend for a reset. So kicking things off on our SPY weekly chart, talking about candle structure and location as we always do. For structure, we certainly have a near perfect doji candle, to be quite honest with you. And structurally speaking, all this is going to indicate is that we have two-sided trade back and forth, back and forth. It's not firmly clear whether or not the buyers are in control or the sellers are in control, right? The lower wick would indicate buyers stepped up, pushed prices higher, and the upper wick would indicate sellers stepped up and pushed prices lower. So two-sided trade back and forth, we're not going to read into it too much. The market's simply in balance. Now, if you read into location, this is where things can start to change a little bit because location does matter. If we look at our prior week's low, I would certainly notice that we have a higher low. That to me checks out as a bullish thing. If we take a look at our highs, we certainly have a new higher high, notably a new all-time high, right? That also checks out for the bulls. So to me, the location point, added into this is giving me a slight slant to the bulls. Now, don't get me wrong. It would have been a much different story if we saw a full-bodied green candle. The bulls would have owned that price action. But as of right now, the location is giving me a cautiously bullish type of slant here in the marketplace. Nothing about this would say, okay, looks like we're clearly rejecting at these highs. Time to short, looking for a massive breakdown. Simply not seeing it here from a location and structural standpoint. Now, if I scrunch up the chart a little bit, remember what we've been discussing for a number of weeks now. If I put in our support trend line that looks like this, if I could get a click, thank you, and redraw that as the channel, you can see our resistance trend line is up here, and that's what we're banging our heads into. Again, this is not a reason to just blindly short the S&P looking for something like this. As I've sort of hammered home in past videos, we're just managing our expectations, expecting more two-sided trade, more back and forth as opposed to instead of just trend continuation, right? A trajectory that would just put us on this parabolic move higher into all-time highs. We're managing expectations, and so far, based on what we've seen in these two candles right here, that has appeared to be the correct thing to do. Not be aggressive to the downside and not be aggressive to the upside, looking for price digestion, waiting for some sort of pattern and the next obvious setup to show itself here from the weekly time frame. Let's drill down to the daily now and talk about tradable levels into the upcoming week and a couple of nuances which I really do think are worth talking about. The first thing I would point out here is the fact that our support trend line, although it's very steep, it is still holding. If this double top that we sort of speculated about was going to pan out on Wednesday, we should have sort of broken down on Thursday, taking us to the neckline, breaking the support trend line. Simply has not happened. If this breaks sideways through time, I would not read into it as a bearish event unless there's a clear violation and, again, just a move simply into the neckline of the double top. If you're not familiar with the neckline, it's simply referring to this level right here. A breakdown of that puts into play the double top pattern unfolding, essentially, right? As of right now, cautiously bullish. We're getting two-sided price acceptance in this very tight range up here. The line in the sand should be 466.30. Now, why that? Because that's exactly where we supported once, twice, and I don't know if you remember from the midweek market update, but we have single prints underneath. So an extremely nuanced level for the buyers to be stepping up at. So that would indicate to me that short-term traders are in control. And as of right now, the larger, stronger seller is just simply not here in this marketplace. The other thing we can talk about is upside targets, because since this is not panning out as a double top as expected here, then it's going to start turning into a pressure cooker top. The more touches, the more pressure that we can put on this 470.40 mark, the more likely that eventually one of the times it is going to break out and lead to higher. Now, what's this blue line on the chart? It's the all-time high that was set in an extended hours session. If I drop down to a 30-minute time frame and zoom in here, what you'll notice, there's your all-time high set in a pre-market session. And generally speaking, this is not a guarantee, this is not a crystal ball, but generally speaking, all-time highs that are set in pre-market or post-market do not hold as the true all-time high of any given move. So to me, it would make sense that on an upside swing, that would be the first target. We can repair this area at the 472, and then we would be looking at the resistance trend line from the daily/weekly perspective. If it's going to happen this week, right, our target would simply be, let's call it 475 to about, let's just call 476. So about a dollar range there for the resistance trend line as it moves higher. As we discussed, to the downside, only on a breakdown of this very nuanced level, your neckline from the double top would be in play at 462. Now, here's something interesting as well, and I don't mean to bring up a ton of things, but the more data we can look at, the better. If I drop down what was going on with the sectors on Friday, what you'll notice is that tech has really fueled the rally in the, well, tech has been rallying, rather, I should say that, and it's been keeping prices elevated in your S&P. What's happened in the XLV for healthcare and XLF for financials, the other two heavy weighted sectors in the top three, incredibly bearish, right? So overall, if tech were to sort of pull back a little bit, I could see the market taking a bit of a downdraft here. As long as it stays above the neckline, though, at that 462, maybe that's your line in the sand. Again, there could be a breakdown for a short trade in here. It would be a quick scalp, but 462 is the must-hold area in my estimation in the S&P. The other thing that would point to a little bit of weakness and really just a narrow rally in tech keeping this afloat would be our internals, right? I talk about this every Wednesday. If you're not familiar with this screen, go ahead and get familiar. Top right-hand corner will tell you what this all is, how you can set it up, and how it'll help you out. But I just wanted to follow up and sort of reiterate what happened into the end of the week, right? I want to show you that Thursday, still incredibly weak breadth. Same thing on Friday, getting even worse even. And then on the advanced decliners, still bearish, tick builds, all bearish into the end of the week. Again, we don't read into it as saying the market has to go down, but overall, if tech were to see a pullback and the XLF is still weak, XLV is still weak, you would expect lower in your S&P. Just be aware that the market's really being propped up here at these highs by a narrow rally across some of tech. We'll get into that when we get to our companies. Let's carry on and get into the QQQ for the NASDAQ, of course. This is the tech sector. If we look at what's going on here, I mean, a little bit of a different story, right? Making that move into blue sky territories. That's a bullish thing. The next thing I would say would be obviously upside levels are simply blue sky levels, whole and half dollars, intraday levels that do form. To the downside, we're looking at break and retest. So this is your first area to pay attention, 399.50, 400, nice psychological number. If it holds, look for that, sort of trend continuation like that. If it pulls back and goes deeper though, this is your line in the sand at 395. Notice that if we were to pull back to that and then bounce, then technically we still have a higher low. Call that your major low, call this your higher low. That would hold up for trend continuation. If it breaks down further than this though, that's where I would start to be a little bit more concerned inside of tech, noting that we may have something that looks like this. What did I just draw in? Certainly a head and shoulders. There's your neckline breakdown. It would also coincide with the double top breakdown in the S&P. Could lead to lower back to the prior breakout point here at your 382.34. Very speculative speaking. I do think that the uptrend is strong. Volume was solid on Thursday and Friday, so we are looking for more upside, but you have the scenarios to pay attention to. The most bullish, upside continuation, no pullback. The second most bullish, pullback, hold, something like this. And then the third bullish, something like this into the future, a violation, boom. Obviously, we just talked about that head and shoulders. Let's wrap up the broad market with the IWM, Russell 2000, and our small caps. This one, extremely disappointing, to be quite honest with you. Everyone and their sister and their sister's mother's brother has been watching this range. Now that we have sort of broken out in our back testing, this is the do or die moment for the IWM. If I zoom in here, what you'll notice is that it's actually not adding up for a bounce. On Thursday's session, a little bit of a lower wick looks somewhat promising. Friday completely took it back, technically closed underneath this 233. You'll also notice that volume is ramping higher down below. Slightly concerning. Now, does it guarantee a breakdown into that 227? Does not guarantee it, but I would just not be as likely to think that we're going to support here and reverse back higher to get into that range there at 240.50. So the main thing to do in IWM is to be patient. If we hold up here, put in some sort of bullish structure, could look like a double bottom, so could look like this, right? Break of the neckline takes you higher to here, could look like an inverted head and shoulders, could look like a number of things. If a pattern happens here, great. I would not have the confidence to just blindly long a hammer candle at the top end of the range, noting, again, the volume increasing, the fact that we're sort of dipping our toe back inside of the range just doesn't add up to me as the way that this move should have unfolded, okay? The last thing I would point out about this and what's unfolding in front of our very eyes would be that this adds up perfectly with the thought that the SPY may need to be cautious, right? may need to be cautiously bullish there. If this is going to break back down into range, that would be a huge signal that everyone from in here will likely be disappointed. Maybe that impacts the broader market. Remember that IWM is seen as more of a risk-on, risk-off asset, and signaling that it's back inside of range wouldn't really bode so well for the rest of the marketplace. We'll see if tech can ultimately keep things afloat, but it can only do so much being an individual sector, whereas this is the entirety of the small caps, right? So to me, this is adding up perfectly for the narrative that we are cautiously bullish across the broad market. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. Jumping right into Apple to kick off our companies here, what you'll notice is a clean move into blue sky territory as we are looking for upside continuation, extremely strong trend, right? Full solid bodied green candles, large bodies, as well as an increase in volume as that move was unfolding. So yes, we are looking for upside continuation. The upside's easy, $1.5 intraday levels that do form here inside of Apple. On the pullbacks though, what are we looking out for? Well, quite simply put, prior all-time high, that's at 157. Underneath that, the little breakout point, little shelf there at 155, and then the line in the sand has to be at 153.13. Now, why does it have to be that? Well, if I zoom in a bit more, what you'll notice is that this was a range, right? And if we're truly making forward and upward progress in Apple, we do not want to return back inside of ranges where we have already spent a majority of time. Now, again, I don't think this is likely based on the volume, based on the structure of how this move has unfolded. And the other reason why I think that, we could support there would be if we take out the fibs from the low of the move to the high of the move. Notice that the 38.2 is kind of in between structure. We're always going to opt for structure, but look at the 61.8, right? It's very close to that area right here, the top of that breakout point. So to me, if we were to pull back there, that needs to hold because as we know, underneath the 61.8, it becomes very likely that you see a 100% retracement of the move. So it all adds up that 153.13 would be your line in the sand in Apple. Hopefully that makes sense and was useful in terms of pullback areas. Chart does look good for higher. Netflix is next, and this one is starting to show a little bit of weakness. I'm not going to say total weakness, but the trend is sort of deteriorating is, I guess, what I would get at here. Notice that we did technically make a new all-time high, $701, shy by a penny. However, look at the activity, right? Inverted hammer when that move actually unfolded, just incrementally higher than our prior all-time high, and we're already starting to fall back down into this overall range here. It's not like we made a clean push above, right? So all things considered in Netflix, I'm not saying it's bearish, but I am saying that the trend looks to be weakening just a little bit. Because of that, I would be more skeptical on a trendline buy, so pullback buy here, and instead be patient to see if we just come down to the bottom end of the range at the 661.50 area. If we do, start to be on the lookout for hammer candles that print. Again, if this is truly going to be a strong move, then we want to see price acceptance. Oops, let's grab the other tool above this area here. We want to see a building block happen here, and then the next one potentially be like that into the future, correct? So that's how I'm thinking about Netflix. It doesn't look weak. Don't get me wrong. This is a very strong uptrend from here to here, but overall, it's starting to show signs that maybe it's slowing down just a little bit. We will see more two-sided back and forth action in this general area. The main line in the stand in Netflix would have to be here, the prior breakout point from here held as perfect support. If we were to come back down into it, would need to hold up and give us some sort of new range for structure into the future. Anything underneath, that's that 50 SMA violation as well, wouldn't look so promising inside of Netflix. It would also be a much more definitive breakdown of the support trend line, correct? So that's Netflix in a nutshell. Looks decent, but trend is starting to deteriorate. Next up, we have Tesla. Zooming back in on this one, what you'll remember is that we were discussing this as being the important thing to watch. And I mean, my goodness, rip your face off rally from the lows straight up to the highs and breaking out on Friday's session. I think we're best served by looking at the 30-minute chart still on this one. We'll turn off the extended hour session. There we go. That's much easier. And again, the resistance is just so obvious. Big resistance. There you go. Big breakout point forms, close above it on Friday's session. So we are looking for that 1160 and the gap fill will be in play next, technically from 1197 up to 1208. Just look at 1200 as a general target here if we see that upside continuation. What I would point out about this though is now that we have a breakout of this very obvious area, the top end of the range, any pullback it should hold. That's your break and retest, correct? At the 1105, as long as it holds, fine, look for that upside. This is where it gets dangerous though. If we do something like this, retest and then fall back down, technically we have a look above and fail from the daily range. The target should be back down towards 1,000. Now, the trend here is fairly strong. I feel like everyone bought, jumped up and bought 1,000. So I'm not sure we make it all the way there, but that's generally what you would look for in a look above and fail. Tesla, again, we're outside of the range, so we have to assume the direction will be up, but be very, very careful around this 1105 on any sort of pullback to retest it, noting what we just talked about with the look above and fail. Let's continue on with Alibaba. We'll go back on out to a daily time frame chart. The chart got absolutely demolished on earnings, as we know. A couple of overhead gaps to contend with now, obviously this one here, but we have a double gap, right? This prior gap here literally leaves no structure in the chart between 148.50 up to 151, we'll call it for round numbers sake. As the chart sits, I'm not saying that's going to be in play. As a matter of fact, it does look like we have a fairly bearish setup unfolding here. However, remember that we've traveled a very, very far distance. People who are piling in short late to the party, if they don't get follow through underneath this 139, I could see potentially a little dead cat bounce unfolding as those shorts cover, but I'm not saying that we're going to reverse fill the gap and make it back up towards 170 over the course of the week, right? It does not look like that at all. I think what we should also do is take a look at the weekly. We'll zoom this way out. I'll grab some more time here. Oops, there we go. We'll go with like 10 years worth of data. There you go. And you can see the next major area to pay attention to was this weekly double bottom around 129. So that's still about $10 lower. I would, maybe there's a short opportunity there, but based on the distance we've traveled already from the earnings gap down, I would not chase this short at this point in time. I would wait for some more structure to build out. If we bounce for a dead cat, put in a clear lower high, maybe the reattempt here is the short to take us lower into that 129 target. But Alibaba not looking attractive for the up or downside, quite frankly, noting that we're kind of extended lower, correct? Next up, we have Facebook. This one as well, very, very ugly chart in my estimation. It's just not abundantly clear from a directional standpoint what way it wants to go. So I'm going to stand by what I've said in the past. I really do think that the trade to watch out for here is this to this. So 355 up to about 367 if you're someone looking for a swing trade, as it just chops around in here. Again, especially with options, it just doesn't make sense to be putting a time deadline for some sort of directional target. So I would avoid doing that. Don't get me wrong, there can be scalp trades to be had in here, but directionally speaking, not abundantly clear here inside of Facebook. The upper wick from Friday would lead me to believe that maybe there's a bit more pullback to be had here. But again, overall, just extremely choppy in this overall range. Even if we drill down to like a 30-minute time frame, you can see the lack of follow through. Certainly bullish day here, out of the gates bullish, but all of that was given back into the rest of the week, right? So all things considered, Facebook direction is not clear. Overall, going to stand by, as mentioned earlier, that long trade from 355 to 367. To the downside, you have a couple levels you can map out if you'd like, but really day trades only in Facebook, in my estimation, as of now. NVIDIA is up next, zooming in as that loads. There we go. Clearly breaking out on earnings. What I want to point out about this is the fact that we opened higher, right? Filled half the gap and then rebounded to close at all-time highs on Friday. So the stronger seller is also not abundantly clear or apparent here inside of NVIDIA. We're technically breaking out of this large bull flag as well. So I would not try to be shorting NVIDIA whatsoever. For me, looking at whole and half dollars intraday levels that form to the upside, noting that 350 is going to be that big psychological magnet in my estimation. So definitely watching out for that one. If it wants to fall back down inside of this range, watch for chop and maybe set an alert underneath the low of Thursday, noting that we have that gap from earnings to fill. Maybe there's a short scalp in there underneath 313.25 to 305.40, but really not overstaying your welcome to the downside, noting again that we are technically breaking out of a massive daily bull flag. That's kind of that one in a nutshell. Next up, we have Microsoft. This one chugging along to the upside. What I think is really interesting about this one is the severity of this support trend line here and the fact that it's still holding. So if this breaks sideways through time, not going to be the end of the world. It was very, very steep. I'm surprised it's held for as long as it has. So again, not reading into it too much unless it's a clear breakdown of price and not just sideways activity, correct? So as of right now, again, I think the 30-minute will do us the most justice here so we can see the levels. The main thing to pay attention to would be the low of Friday. You can see double top from in here. So very important area. If it breaks, that's your first signal that maybe we go lower into that 338. And then this is really the area to watch out for. Notice that it was big resistance here, here, and then turned support 1, 2, 3. So a very technically respected level, that 338. That's an all eyes on level. If we start printing hammers around it, look for the reversal higher. Note again that would likely be a break sideways through time of the support trend line. Not a big deal. But if we break down underneath the 338, that's where where the larger scalp to the downside unfolds, looking at about 330. Okay, so that's kind of Microsoft in a nutshell. Directionally speaking, the trend is strong. I wouldn't be fishing for shorts here unless there's a clean breakdown of this area. As we mentioned, 338, if it goes, kind of opens the door for something like this. Overall, not going to destroy the chart. From there, we would look for trend continuation back higher. So maybe it's a pullback buy if we get into 330.66. As the chart sits now, inverted hammer would keep me cautious early on in the week, but you have the levels to watch out for as of now. Trend is still strong. We talked both about up and downside levels. Maybe we didn't talk about upside levels, but we'll do it now. $1.5 intraday levels that do form 350 psychological target overhead, very similar to what we just saw inside of what was that actually? That was Nvidia, maybe? Yes, Nvidia. Next up, we have Amazon. Last but not least, the beast here. Taking a closer look, very clean and simple chart, breaking out over that gap fill area here. Notice that we consolidated underneath it. Thursday, obviously monster day, big volume coming in to support the move. Here's a couple scenarios for you to watch out for. Obviously on Friday, we printed an inverted hammer with a fairly weak close, right? So here's what I would watch out for inside of Amazon. First one would be more of a pullback to take us to break and retest the level at 35.85. If that happens, looking for rebounds to take us back higher into 37.10 and then 37.60, the prior highs, all-time highs might I add, from in here. That's the break and retest example. The other one would certainly be just another bull flag that forms somewhere up here. If we consolidate in this kind of range, fine, looking for a breakout over that 37.60 into blue sky territories for whole and half dollars. Actually on Amazon, it's just going to be whole dollars, $5 marks, $10 marks, so on and so forth. You get the gist here now that we're trading such an expensive stock. So if that's the scenario that's going to unfold, let's take out the fibs just to see where that 38.2 is. Notice that technically Friday's close violated that. I would just generally look for the 50% mark maybe, so over 36.60 is healthy consolidation here inside of Amazon. We talked about the downside supporting at the top of the breakout range. Anything underneath really destroys the chart, does a little bit more damage than I would like, taking us back down into here. I would expect two-sided chop until we get into the support trend line, which, just note as well, we're fairly far away from trend. So maybe the pullback does happen. Maybe this is the more likely scenario to get us closer to the support trend line. That's really going to wrap up the companies. Let's move into the ideas. Quick reminder to hit the thumbs up button, subscribe to the channel, hit the bell button, all of that good stuff YouTube tells us to tell you guys. And let's get right into the trade ideas. First one is going to be on CSCO for Cisco Systems. What you'll notice is that this level right here is very well respected as a technical area of resistance in the past, then turning into support right here. And that's exactly where we gapped down into on the earnings announcement. The fact that we have back-to-back hammers here would lead me to believe that the buyers are stepping up and maybe there's a chance for a gap fill overhead. So that's the trade we're watching out for here. Up and over 54 starts to fill the gap up towards 56 quarter. Even the 50 SMA at 56, the round number, would be a reasonable target here inside of Cisco. So if it breaks, that's your trigger for a long. If it stays in the range, keeping it on my radar, just being patient for the breakout higher. And if it falls out of this, so underneath 52.68, that's where I would take it off my radar. Next up, we have TSM, and this one is coming in perfectly to the top end of a range. Here is your well-defined channel. And I'm not going to tell you exactly what you should do, but we always know there's opportunity at the top of a range. You can either get a breakout or mean reversion here. We're not just chopping around in the midpoint as we were in this section of the chart, correct? So all things considered, we have an opportunity. Now, a couple of things I would just watch out for, right, would be, can we put in a daily bull flag? If that happens, looking for the breakout example to take us into 132.39, monitor for continuation from there. I would also point out that this uptrend is fairly respectable. It's not like this where we had gaps all over the place. We never had clear consolidation or higher lows. No, this is nice, right? We get a high, higher low, new high, higher low, so on and so forth. That's a respectable uptrend that would lead me to believe that maybe a flag here takes us higher into that upside target. If we immediately reject, start printing a big inverted hammer, let's say we get a fake breakout, close back down underneath, maybe you start targeting the midpoint of the range, which would be here at 117.11. Just a couple of thoughts. We have opportunity at the top end of the range. Next up, we have SQ. Talked in length on a one-on-one with someone about SQ today, and we both came to the conclusion that this is actually setting up as a bearish breakdown underneath 225. There's a couple of things here, right? You have the resistance trend line. You have this flat area of support. That's a descending triangle. You have lower highs, right? Lower high, lower high, lower high. This is a significantly lower high here, and we're retesting this, which is turning into a flush point, the low end of the descending triangle, in a very short proximity of time. So a breakdown of 225 puts into play 211.41, just coming from this prior shelf here. Call it 210 if you like nice round numbers, and then underneath that, it's all about 200 psychological. logical. So looking for short scalps here in SQ in the upcoming week. If it wants to remain in the triangle, fine. I would just look for sideways activity above 225. The only directional move higher is above this cluster of lower highs to take us into the resistance trend line here. That's up and over 238.57. But as the chart sits now, looking fairly bearish, a little bit of an increase to the downside in volume on Friday's session. Next up, we have Nike, which is going to be very similar to Lulu. So we're going to cover those back to back here, both clothing companies, obviously. Nike, big inverted H pattern. You could look at it like that. We are closing above this prior set of pivot highs in here on Friday's session. Increase in volume on Friday's session as well. So looking for a little bit of follow through. If it wants to take out the 180, then fine. Looking for blue sky territory breakout to happen in Nike as we head into the holiday season. You know, generally speaking, how does Nike do ahead of the holidays? Let's just get a feel for this, right? So I'm going to go ahead and grab some more time here. We'll go with 2 years just to see what last season brought us. And here's November, December. So clearly, nice strong uptrend there. If we look at, let's just go one more back just so we're not cherry picking the COV data, if you know what I'm saying there. Going back into history, and where's another one? So looking at this section of the chart, here's Nike back between October to December, bullish as well. So maybe it sees a little bit of run before the holiday season. That's all I'm getting at with Nike. And now over to Lulu, same exact sort of thinking. This setup actually looks a little bit better, noting that the flag activity here is much more tight and, you know, just respectable in terms of levels and pattern. The drawback on Lulu is, though, if we come on over to the trade tab, what you'll notice is that the options here are really spready. Excuse me, I'm sorry about that. And the options volume is actually pretty pathetic, okay? So Lulu would probably start looking at shares instead of options unless you go further out and find something that might have some better volume. Yeah, even here, there's a little bit better, right? You get about 1,000 contracts, but you're paying much more. So just something to balance. Nike and Lulu both looking bullish into the holiday season. Matterport is up next. This one is sort of a metaverse play, actually. This is kind of interesting. I owned it because of the and that's a disclaimer there as well. I own this in a long-term portfolio. I owned it because of the real estate thing, right? And obviously now it's turning into the metaverse play. So all things considered, looking at this bull flag here, I think consolidation is healthy. Breakout up and over 30 takes you into blue sky territories. Not interested in the trade until, if we break down under 26, it's patience until we get to the support trend line, maybe the 50 SMA as well. Looking for hammer candles that print down here, indecision doji candles that print down here. Metaverse, Matterport rather. Looking at the bull flag to hold up, but even if it wants to pull back deeper, considering pullback buys at the support trend line, the secondary, not the primary as of right now. So that's Matterport in a nutshell. Next up is Goldman Sachs. Obviously, we discussed the sectors there being weak in banking, but maybe they're due for a bounce, right? If you look at a majority of the banks, you can go look at Morgan Stanley, you can look at JP Morgan, you can look at Wells Fargo. All of them have some sort of similar support trend line, and all of them came into it on Friday. Now it's just a question of, do we bounce and rebound out of it to get back into known areas of resistance? I like this one because we have a clear shelf of resistance, which was support as well here, then resistance as an upside target. It's also very close to the 50 SMA. So to me, this one's on my watch list, but any of the banks out there could essentially see a rebound for higher. Not interested in the trade, obviously, if we never see follow through up and over Friday's high, or we firmly break down underneath the support trend line. And then lastly, I have BCTX from Deform in the Discord there. This is a therapeutics play, generally not interested in these types of things. However, the pattern here was phenomenal. I couldn't not at least mention it. So if you look at this as a bull flag, Friday's close was up above. We'll ultimately see if we can get some more continuation, some follow through out of the pattern. I would basically look at 1150 as a doubling of the range, right? If we do something like this, maybe it's actually just shy of that 1125. That would be the first resistance, then just monitoring for continuation. Essentially, if I scrunch the chart up, there's really, nothing was going on back here worth paying attention to. There's basically no volume. You can see extremely choppy. It was probably not even listed at that point in time. So all things considered, basically moving into the equivalent of blue sky territories here inside of BCTX. That's really going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget that our secondary channel is linked in the description. And all of that being said, I wish you a happy Thanksgiving if you celebrate it and a green trading week.